speaking, yeah, I always look at funding rates, of course, just to see where everything is, and that usually just goes away. Okay, bullish funding, nothing's really changed. Harmony is going to still be one of the bigger kickers I use. The flow, especially if I have the flow set on a higher time frame data, that really helps me kind of like understand, especially sector-wise, where everything is. So even here on the higher time frame, we can kind of see clearly a breakdown, essentially a deviation in a sense, right? Breakdown, continue move back to the downside. Let me just flip on an empty chart. Probably easier. Yeah, that way I don't mess up my other chart. But I really like it in that sense because it helps me get a higher time frame picture of like what's going on. And yeah, once I've kind of looked at that, see the general trend, okay, we're seeing that stable coins are still leading up. Why? Because we've made the move down and we've lost the level essentially that we wanted to hold and move back to the downside. So that can kind of go away at that point just to be like, okay, that's the correlation of the market. The focus here also then is going to be looking at the oscillator. It's pretty strong, 1 hour, 4 hour, and even lower time frame. The big thing that I like to use the most, even if I'm not using the oscillator at all, like I said, retail stablecoin demand on the on-chain metric bundle, it's money. It's literally just the easiest thing. And the way I have that set up is retail stablecoin demand is what I picked. I've inverted the chart. That way it flows with the price action movement. And then I've had it include divergences. So essentially what you're seeing now is the red becomes very, very high demand, or excuse me, very, very low demand of retail stablecoins. So, or retail's demand for stablecoins is very, very low. And when you see that, that should be a very strong indicator on something like the 1 hour, the 4 hour, that, hey, everyone is allocated into crypto. The move is coming to an end. And then we look for that kind of drop off. And usually it drops off before price drops off, which it did. So it's very strong. It's extremely powerful in that sense. Also with the divergences, right? We have a low created. We have a higher low that still gave us a bull div. And then we even dipped lower before creating a move higher to the upside. So a little bit of a fake out with the divergence. Again, you need to be basing this all for price action at the end of the day. And the way I look at it myself, especially on the 1 hour, yeah, I've got the core trend and the bands on right now because I wanted to go through that. A lot of what I do higher time frame, I'll look for failures. I'll double check on the oscillator and say, like, are we failing stuff? Okay, we got a trend change potential. Let's fail the daily. Let's move to the downside. That type of thing. Really basic, really simple things. And even on the oscillator here at the actual low, we got the bull div. We had the higher low. Hold of level, continuation up. So the idea being here with this kind of little indicator run through is that we're going to be looking at things that really help us trade low time frame, which really help us get an understanding of like where stuff is going. So even on the 15-minute, and I have core trend on just for the bands and also for essentially the different levels. I've got liquidity grabs being shown because a lot of times, even on the 1 hour, you'll see some liquidity grabs, and that's usually a good indicator that, hey, even low time frame, we're moving away. And these will show when there's a wick to the upside that closes back above stuff. And very often when you start seeing, 2 in a row at the bands, at the daily open, it's a continuation failure down. Even though in this zone, we got a bull div right below it on the 15, I'm not super concerned about the bullish divergences on the very low time frames. That's mostly a higher time frame thing to me. 1 hour, 4 hour plus. Realistically, 4 hour plus. The daily divergences are massive when they hit because they have like a 90% hit rate on bullish divergence on daily time frame or bearish divergence. So when we get into the lows like we have here, right? And I think this is going to be an interesting spot to kind of look at it. We went through a level of essentially squeezing, where the support and the resistance came down to a point, and then we broke down and then failed under some structure and just moved down hard. So what I look for in that type of stuff, again, even though we bullishly tested a level here on the 15-minute, if we then fail and then secondarily fail the major level above us, we break down. If you didn't get the short from the high, that's fine because it's hard to short the tops. But what do you always get? A retest. Well, not always, but sometimes. So what do we get? A nice failure of the daily open. And I think that's kind of like the big thing to look at, right? We gained above, bearish testing, A lot of resistance, a lot of seller pressure. We're at the high of these bands. These bands are still very powerful, low time frame. 15-minute, I always have them on just because it gives me a nice indication of when we actually stop and create some lows. We look for secondary failure, and then eventually, bang, off a cliff. And yeah, that's essentially what happened. As we squeezed in this kind of conditions, the support resistance getting tighter and tighter. More longs entered, more shorts entered. It was very clear, once we started failing, that we went lower. And yeah, so this is a pretty good part here. We want to see some higher lows currently. We've got some very low structure on the 15-minute with both very high retail stablecoin demand, which is kind of this line. Oh, nope. Wrong one. This line. So very high retail stablecoin demand. It gives us an idea that we're looking for some higher lows. When we look at that structure, and like we talked about on the previous firesides, even on a 15-minute, understanding the swing structure is very key, because what does that mean? What does it mean that we're above it? Well, that's the level you want to bullish retest. If you test the low of the swing, right, that's the low, because price is going down, a bearish retest on the low of the swing means high probability of reversal. A retest of the high of the swing, because again, price is going that way, that's the high in the direction of travel. That's where we look for a secondary failure above to go lower, if that makes sense. So the reason we do that essentially is that, think of it like the same thing as like if you have a support, right? If this is offering support and we're coming back down to test stuff, right? We create the low, essentially, and then we're up above it, and we come back down. Do we want to test the low of the support all the way at the bottom? No. Why? Because if you test the support all the way at the bottom, that means they're lined up. They're very close to each other. So it's not hard even for one entity to try and push price lower to break the support. So when you have higher tests of support, like testing there, right? You're essentially doing the same thing if we were to come there. That's why that's a bullish test on support, because it's testing the low of it as the direction of travel is going. And what that does is essentially it goes to the rule. If you test the low of the swing, there's a higher probability of reversal and continuation away. If you test the high of the swing right there, or if we look into the upside, right, that's the high, that's the low, because price is traveling up. If you test the low of the swing, high probability of reversal. You test the high of the swing, lower probability of reversal. It can still reverse away, right? But you're looking for the highest probability. And that's why we look at those swing structures as like major points. And when they line up with the other tools we have, with bands, with liquidations, bang, bang, and then we have the blue trend change. Oh, we lost the daily open, a key high time frame level not to lose, losing the upside structure, very clearly defined as, us going to the upside, bullish retest, failure to regain the level, right? The daily open here was the level that we gained that took us to the high. We failed it, right? Bearishly retested the level that took us to the high and then continued away. Really simple stuff. And that's the problem, is that sometimes it's too simple. And most people will think, oh, but it's got to be more complicated than that. And it really isn't, unfortunately. If it was more complicated, it might actually be easier to teach or for people to understand. But essentially, that's what we kind of look for. Now, with the new tools as well that we've got with the MDVD, this is where stuff gets really cool, especially on stuff like the 15-minute per scalping. So I just popped this off for a second to kind of clean the chart up. And I've got, I've turned volume candles on, session volumes off, volume ranges off, volume profile with point of control is on, and I've got regular divergences on. When you see these divergences, these bear divs, that's another thing telling you, hey, we have a divergence in volume, right? We're divergence in volume. You could treat that very similar to stuff like on the oscillator. And now what essentially with all of this stuff, what do we have, right? We've got a divergence, we've got a high, we've got a test into the top of the bands, we've got a trend change potential that started back here with this low, and now we've got a yellow dot for extreme oversold conditions right going into this. So you have multiple points of saying, well, that's the failure. Now looking at the actual MDVD, like with the multi-dimensional volume delta, so I'll leave the core trend off, this is where stuff gets pretty cool as far as looking for reversals. So what you actually get when you have things like this, let's use this as an example, and I'll just turn the auto charting off. Very strong bullish candles, essentially this bullish candle back at 2030 or 1830 UTC, because I'm +2, right? What did we see? We saw a massive move up, lots of volume to the upside, but in the next candle, we had a bearish close. We had a bearish candle that took all of the volume of this high and it closed back below it. What does that tell you about the volume in these highs? It's out of position. When something is out of position, essentially it means price is moving away from you and you're in an opposing position like a long, expecting more upside. That position, that's where the long volume was, is out of position. And that's what we look for. When we see stuff like that, it really gives us a good potential look at where we actually see reversals. So that's a big one to keep an eye on when you have especially volume that's very like bullish volume that's into like very high in the wicks, and then you have bearish volume that just engulfs the previous volume. Treat that as a reversal, right? And it was reversal. What do we have? Back down, continued reversal, move back up. Did we gain back any of the major bearish volume? No, it reversed away. So these now together give us quite a bit of confluence to saying, well, that's where the failure occurred. That's the confirmation of the failure, and price continued to move away into the downside. So the more we can kind of get used to using these things, again, the way we're using the volume, the volume control candles, we're treating it quite similarly to the concept of order flow, where we see orders that are out of position. This is almost a simpler way to use it. It's not order flow, so don't confuse the two, but we're using it in a very similar way because it allows us to then see the changes in volume as who's in control of what and where. So what we've essentially done with this entire move, right? Oh, we have bearish volume, like here at the low. Most of the bearish volume is at the low, right? Was that taken out? No. But price closed back above the major volume. So what do we have? What do we want to see now? Well, for the bearish volume to continue, you need price to then move below that volume. Until then, that volume is providing potential liquidity to the upside move, which is what you got. So higher time frame, there's a lot we can do with this as well. Looking at the local stuff, right? Who's in control locally of the price action? Very clearly bearish in control, right? But what else? What's some other things we can use to help us? Well, there's not a lot of volume here. The bullish volume, we're below it. What are we doing with the current candle, essentially? Essentially just talking about what we were just talking about, right? We're testing the levels we want to test. We want to see holds here, right? We're not seeing the hold. That's the big thing now. So for us to reverse, where's the majority of the volume? You want the next candle to get some bullish volume above these lows. Essentially getting a bull candle up in this area. Currently, it's quite strong. And where are you looking to test? Still looking to test the low of the move since the high of the swing, because the low of the swing's already been fully tested. You got 10 seconds left on the 15-second candle. Let's see what happens. It's a very strong downside move. So what you see then, if that's a strong side move, you can either see an instant reversal, or you see a continuation of the downside within a bullish regain. If you don't see that right away, then it's just downside continuation. So looking at the volume delta, again, where's the majority of the volume? It's above us. The bearish volume's clearly in control in this entire move. We're getting to the bottom on the oscillator, on stablecoin demand, all of it, right? We want to see reversal. We want to see it now. And what we need to see? We need to see bullish volume come in, creating some structure above, I guess, 28.3, and fully in control of the candle. Until that happens, you're in a continuation downside move, right? So you're looking for the reversal. You're bouncing at the level right now, or you're holding it currently. You want to see the reversal to start to take place. Is it a little bit too low time frame to kind of like, see like it hasn't happened yet? Exactly. That's the problem. It's still happening as we're talking about it. It's still holding this kind of block, essentially. Right? So what do we want to see? You want to see a gain of stuff. Does it look really clean? No, not particularly. Let's go lower time frame and see if we can get some better stuff. So there you go. Quite low volume. A lot of bullish in control. Saw a little bit of failure there and a continuation. From the stuff that I've seen with this, the lower time frames, like the 3 minute, you can still use it. 1 minute, until it starts to get a bit iffy. But one thing that's really useful as well is looking at the volume profile, where we have the local volume and control on the low time frame. Is that a major level to gain back above? I'd say so, right? Gaining back above 28.3, just like we saw in the 15 minute. That's going to be a big boy deal. So that's where we want to see the bullish reaction to take us back above. Then this entire thing is essentially from the low, higher low, right? Oh, excuse me, higher high, and then higher low. That's what we want to see for trend continuation. We're seeing some bull div, low time frame. Again, don't take it as gospel, and just always double check exactly which indicator it's on, because I have mine looped. It's on the oscillator, so that's good, right? Seeing some bullish div stuff from the previous lows that we created back here. That's cool. We're seeing the bounce move. That's great. Let's see some gains back above, and let's wait until we get a 15-minute volume above it. So with pretty good confluence, you can kind of use these things together. With core trend and things like that, even on these very low time frames, you'll see quite a bit of heavy wicks into the bands. It's not as effective just because of how volatile low time frame stuff is. But if you're looking at reversals, failures, they're pretty strong as well. And combined, it gives you quite a bit of information as far as like what's failing where and why. What's the level to gain above now that we're bouncing? We want to see that for continuation move up. We have tested kind of like the low of this. So what happens if we create new lows after that low? We probably create new lows overall. That's the expectation at least. So, cool. Current 15 minute, let me just look at that. Yep, starting to reverse away. Went almost to the low of it. We'd like to see some bigger green volume come in. We want again, what do we say? Close above that 28.3 level, gaining some of that volume back, putting it out of position, and then we can start clawing back some volume back to the upside. So, I think overall, if the more you guys use these things to get kind of like the hang of where stuff is, it'll really help you identify, well, that's a failure and why. And then we can start taking these nice scalp positions. Because even scalping something like, we're coming back down, we're bearishly retesting stuff here, and we move back down before we create some bullish structure. I mean, a 1.5% move with some very small leverage can still net you quite a bit day on day. And that's the big thing, right? We want something repeatable. If it makes you good money, like I know a lot of people trade shit coins. I'm not a big fan of that. I have some bags of things just because I look at it in that sense. It's not repeatable day in, day out. Versus this type of stuff of like looking for failures on anything I look at top 100 essentially is almost always repeatable. And that to me is like what makes it work in my head. Is that if it's not like consistently repeatable, yeah, you're going to have some outliers where stuff doesn't work against you, which that's just a reality. You're not going to win every trade. Most people don't even win most of their trades. So it needs to be repeatable, it needs to be high probability, and you need to have good risk reward on your trades. That's the big thing to kind of like keep in mind with this stuff. But what do you guys think? And do you guys have any comments or questions? You can pop them in the chat if you don't feel like chatting, and then we can kind of go from there. Questions, comments? Other use cases potentially? Other ideas that you guys have had? I'd love to hear them. That was me ranting for like 20 minutes. Nope. You guys can still hear me, right? It's not a complete dead zone, is it? Okay, cool. All right, so nothing, everyone's really cool with that. Awesome. So that's the low time frame stuff kind of covered. Again, like use these things to your advantage. Find the tools that really work for you. I really like the fact that you can combine these things together, right? How many points of confluence I want? I want 3 to 4 essentially to catch these kind of moves, right? When we get stuff that's like this, candle closing, volume out of position, gaining above previous stuff, losing stuff, you can use it on higher time frame as well. I'm not so key on, the higher time frames with a lot of the band stuff and some of these other things. With the volume, why is this a potential reversal even on the 1 hour? Well, the current 1 hour, right? If all of the bullish volume's below us, that means that the bearish volume is still technically not, out of position yet. If we start gaining back above and we start flipping to bullish volume on the 1 hour, we got, 23 minutes left. Again, gaining above 28.3 is essentially going to give us, let me see if I can get this. Yeah, essentially gaining above that. This whole thing is now giving us a little bit of a liquidity grab. We want to see some gain of level, higher time frame. And that's how this whole thing works. You can still use the bands. You can still use the stuff that works. The core trend, again, yeah, they're nice signals for stuff breaking down. But essentially what you want to do is have high confluence. When you have high confluence in trades, that's everything, essentially. That's the whole point of this, is that I can repeat it. I can do it several times in a row, and it'll still give me the same information, the same output. And that's what we're trying to kind of, play as a game here, right? So, yeah, locally, what are you doing? You're looking for reversal. You're seeing some stuff happen here that's pretty nice overall. 28.252, 28.226. These lows that created the low in the structure. We stall that on the 15-minute. We still want to see a gain of stuff. Until then, what have we essentially done? Have we gained anything back? No. Do we want to wait until we gain something back? Probably. It's probably a good move to wait until we get, this bearish candle out of position, right? Gain above that. Then we're essentially moving back to the upside. So, cool. Awesome. Any questions there? So that's the low time frame stuff. Scalping, again, using the tools we have, using the confluence of understanding the swings and the structure that we have. It plays out on every time frame, every level. That's the big deal that matters. So we'll look a little bit higher time frame, and we'll look through a couple things. Yeah, that is not a nice one. That is nasty. Again, higher time frame, turn the divergences off unless you want to see major reversals in volume. Looking at the point of control stuff, that's going to be a big deal, especially on like the 4 hour. Again, this is the point of major failure, and it very often is the point of major failure. Does it line up with other structure? You're damn right it does. Failure, move below. So what's the level to gain to go higher? 28.2. What does that do? It at least tests up into the 30K zone. Until we get there, we're still in bearish volume control. I've got the candles on now on the 4 hour. It's not super as relevant unless you see some major differences. I don't think you can catch everything on the 4 hour with the cumulative volume. The volume control candles very heavily, but some stuff that does work are things like the volume range. Essentially now it's still giving you a potential distribution zone as a range, and that's what that is. When we have those volume ranges on, the blue is essentially giving us a bit of an accumulation range. We're now in a bit of a distribution range overall in volume. What kind of invalidates that? Gaining that on the 29.2, that gives us a good idea. If we gain the top of this little range, where are we going? Probably new highs or test the highs overall. Beautiful short would be essentially gain that, and then we go all the way to the highs, pop them, and then swing fail back into the structure. Then it's done. And that's the meanest thing they could do. And a lot of times that's the kind of thought process. And yeah, in a sense, we're still in it, like haven't gained enough back to give us a good move back to the upside locally. And even on the current 4 hour, I think that's reciprocated. So I usually check that just to see overall kind of direction of volume and movement. Something that I really do like on the 4 hour is the session volume. The session volume on the 4 hour, it'll break it down between, it's a 7-day period, it's a week-long period. So when we have very clear levels of like bullish volume, the things that you look at with the actual reversals is when you see, very high volume, then you lose a level, and then volume starts tapering off. Essentially, you're seeing on chart a reversal of volume. And that's going to be a big deal, at the higher time frames. So because of that, and because of seeing these levels and what we're able to do, we can then identify stuff where essentially you can almost trace it out, right? You're seeing some reversals of volume. Oh, we're breaking back up to test stuff. We're gaining above structure. Essentially, it gives you a bit of a guide to say, well, if we're gaining above volume-wise, it's an important level. And then looking on like the highest time frames as well, obviously use some of your judgment here, but when you have very key zones, these are, what is this? This is It's still in it now. So it's essentially still in the 30-day, month-long period on the daily is what you're seeing. Very, very bullish volume in this kind of daily zone as we have upside move. And then this entire upside we created above 30K, did we have high volume or low volume? What volume was higher in that period? The downside volume, the short volume. So when you see that kind of like, strength, upside move, and then complete tapering off of volume, that's a general, larger idea of, hey, we're losing stuff. We're not gaining stuff back. There's no interest from buyers to buy above 30K. There was interest down here when we started to flip at 25K. That's awesome. But what do we see before that? Disinterest, low volume, loss of level, new low to 20K, broke all the stuff. And that's the way the highest time frame volume works. On the daily, with the volume profile we've created here as well, I mean, that's a pretty key thing in my head. The fact that we broke below it, bearishly tested it, and then regained it, and now we're still above it. So these are some higher time frame levels that you don't want to lose, because losing them would be essentially pretty bad. Losing the volume block here, you go into essentially a very volume dead zone below us. That coincides with liquidations. That coincides with everything else as far as losing levels to break us back down to 25K, potentially back down to the next major point of control, which is at 23.1, right? So higher time frame, you have a pretty decent game plan. We start failing and barely retesting, some of these control points. Where's our higher time frame target essentially? We're probably going to still stop somewhere in here and gain 24.6, maybe 25K, kind of test the highs of it. But that's essentially the level you really don't want to lose overall. Because if you lose that, what do you have below you? So pretty much volume dead zone is to the yearly open. And then you start getting some really nasty ideas, essentially, of failing and continuously failing levels. So the high time frame with this and the volume profile, now that we have it built in as an indicator again, we had it once in auto charting tools, but it's back now. What have we essentially seen, right? We're still holding the volume locally, the important stuff, the higher volume. If we start losing it, we start losing 27.6. Again, we've talked about 26, we've talked about 27K, 26.7. This is at the very low ends of this structure here. And if we start losing that, if we lose this structure that we've created here, it's done. There's nothing left to regain until it literally regains April Q2. That's the only way I would invalidate a downside move, and I probably wouldn't even do that. I would probably have to wait for, that regain of like the May open for me to get bullish. And we're under everything. So again, with the volume profile and higher time frames, it's the same way as you would use it if you have a premium on TradingView. You're essentially trying to identify the low points where there's very low volume and the very high points where you have high volume. High volume means that there's a lot of orders that were placed in this area, which means there's probably a lot of action if you go back down to it. That price will kind of stagnate at these high volume areas because there's positions. Stuff is happening, right? Stuff is constantly happening in these zones, whether it's, people getting entered in new positions, people getting stopped out of positions, people getting liquidated, people taking profit. All of these things are happening at very high volume areas. At low volume areas, price move through it without creating a big enough block for a lot of orders relatively to be placed. So that means is that if we lose points of control, essentially from 27.6, the lows that we don't want to lose at 27K, 26.7, losing that essentially has a pretty good probability of taking us back into the high volume areas down here at 23K. And that's where we want to see a hold if we have the breakdown. And this is how you have the high time frame plan in your head, which is high time frame. If we lose the point of control, we lose the lows that we created from, Saturday, the 24th, the 25th, and that whole week. Then it looks pretty rough to come back down to what essentially is 23.1. I mean, that's essentially like kind of the midpoint of this range, right? Roundabouts. So there's a lot to be said with that. I know it's quite a lot of information for a lot of people, but that's how you're using volume profile, higher time frame, lower time frame. There's no major difference in the way you use volume profile. You just take it with a grain of salt and say, hey, I'm on the 15-minute. I need to make sure I don't get tunnel vision. And the tunnel vision that's very, very common is that you forget what the macro trend is, right? We're still in a bear market. We're still in like pretty shitty situations with the banking crisis. We've got, Mr. Powell tonight who's going to tell us, we're going to raise interest rates probably. and continue to do so, which is crazy, at this point. Like, you could see a lot more banks fail, and that would be absolutely terrible. So, essentially, the volume profile in the lower time frames doesn't change so much. You've got some volume being filled out here, kind of like in this zone. It's testing some structure. We've lost the stuff to the upside. We'd like to see the hold now to keep us going. And until we do that, it doesn't really give us a lot of confluence that, if we break back down, what needs to hold low time frame? 28K. I think that kind of plays out. If we look at that higher time frame as well, does that kind of play out? Yeah, that needs to hold. Just wait for everything to load up. Yeah, there's some volume here that's important. Not a whole lot of structure. We've got some support built in this area. So we're still coming down. We're essentially just failing back to the downside until we gain something back above. So 15 minute looks rough. Let's see. Put the volume control candles on. Again, we know that we're getting to a low oscillator wise, but does the oscillator mean everything on the low time frame? No. The only thing that we have now essentially is that we created, bullish volume, and we're essentially below it right now. The bullish volume that we had in the last candle, the buyback, we're below it again. What does that tell you? Until we gain that back, until we gain back above essentially the bearish volume that's in control at 28.3, the low time frame move is still to the downside. We tested the lows, we broke it, right? In that last 15-minute candle, we broke the lows that we created in this structure. The priority is still down until we gain something back. You want bullish volume to essentially control this, to move back to the upside, and that would give us a nice test on the highs, a nice bullish back test on the hold, and then overall, it's a higher low. But we need to hold it. Until we see a hold your jets. Everyone's trying to long this sucker because they're probably looking at RSI and a couple other metrics. Essentially, bearish volume still in control, still at the lows. This is out of position. All of this is out of position. And this is dominating. This is dominating until we have reversal. That's all it is. If we get the close in the next 10 minutes of a bull candle going like that, with this being out of position, gaining back above structure, I'd be a little bit more sideways up-ish. But right now, you're seeing, pretty strong in control of the bears. Yep. Bull div. Let's see if you get it. It's not really holding anything structure-wise yet. Bullish volume that we created 2, 3, or 3-minute periods ago. It's still kind of holding. We don't want to lose that. If we do, we should see a flush out of this zone, all of the longs that are left, moving us back to the downside. So, sorry if I spoke really fast. I know I was just kind of rattling stuff off there for information-wise. Any questions, anything in the chat you guys want to ask about what we could do? Essentially benefits what your kind of trading style is. I'd love to hear your thoughts. So, nothing, just stunned silence. Stunned silence. Okay. So essentially, again, the best stuff I see with like the volume candles, look for that, right? Volume on the candle is what? It's above where we are. Bad close. Bears essentially control. Where's the retest? That's the retest failure. It's even simple on swing structure on low time frames. And you can do a lot with it. You absolutely can. But again, it's very easy to get tunnel vision. Very easy to get tunnel vision. So also the volume stuff won't actually work on things like the dollar currency index, just because this is an index that doesn't have a set of volume that shouldn't work. So, yeah. Didn't give you that data. That's fine. But there are other things you can use. You can use, no, actually, I don't think you can use volume profile on it. I'll double check it real quick. But overall, this is a nice structure failure. Yeah, I said that on the stream. That's what we saw essentially. Bearish back test, continuation down. I really want this kind of fake out high to be the high on the dollar currency index, because on the 4-hour we actually saw that. So we saw the pop above the major levels. Like, forget that. That's not super important. That was just that it broke out. Bearishly, popped above, looked really strong Tuesday morning, and then by the time we had the next candle going into the stream and stuff, we were still above the level. We had the close below, and then we had a 4-hour bearish retest of the major levels of the monthly downside continuation. That's awesome. That's what we want to see. So sounds good though, right? Yep. Yeah, so we'd like to see that, and if that keeps ripping to the downside, yeah, the dollar's weak. We want to see the higher low on Bitcoin. We want to see these lows essentially hold the 28.1 zone, and then bounce pretty much from where it is now on up. Lowest it can go. It very much could. If they don't start fixing it really rapidly, I don't know what they can do. I really don't. Yeah, and then next year's the election, and I mean, God, if you don't really have any good candidates, essentially, it's going to be wild to watch it happen in real life. It's so dumb. Just bad decision after bad decision, and well, that's how you wreck a country. So yeah, nothing's really changed in the overall thing. Dude, I'm from there, and it just blows my mind. Like, there's some great parts about it. A lot of the problem is, the whole freedom stuff. Like, I'm kind of libertarian in that sense. Like, do what you want. Government leaves me alone, but it hasn't been that way for a very long time. I'm not going to get into the whole politics stuff. I generally just don't give a shit. I couldn't be bothered right now. This would be nice if this 15-minute pops right down to 28.1 or 28K, and then we see the reversal. Let's see. Yeah. Also, like I said, I posted the, you can end it wherever you want, Egil. That's pretty much it. All I wanted to go through. Kind of going through, tying some stuff together with the different indicators for manually trading. I think Mr. Bing is kind of taking the bot stuff as far as it can go, as far as what we can do now with Wonder Trading and outsourcing bot stuff. So,
hey, Chris.
Yeah, what's up?
If you don't mind, buddy, can you the 15-minute? If you can click on the volume profile indicator, I just want to take a screenshot to show where the candles, where you have like the volume staggered on the candles themselves.
Okay, so you want the volume control candles.
Okay.
Yeah. So yeah. So now on the current 15-minute, what are you seeing? Right, and it's going to be a little bit different. Again, there's a disparity. I'm looking at a spot index compared to a perpetual index, right? Generally, look at the highest volume stuff. If you're trading spot, look at the thing that you're trading. What are we seeing here? Essentially, bearish volume is below us, and the price is still above that level. It's coming back down now. You want to see the 15-minute kind of close bullishly above the structure that it's creating. Otherwise, until that happens, you're still in downside control. So where you actually see the reversals, even here, still green volume. What do we have here? We had red volume significantly under the green volume. What does that mean? It means that this green volume is out of position. Same thing as green volume out of position. Same thing as green volume out of position. It's been consistent. So now what do you want to see is for some reversal. Here's a good one, right? Bearish volume out of position. Not a lot of bullish volume. essentially, but it was still holding above it. Went back to the upside, low volume, spot sells, some buys. Let's see if you can get a reversal. If you get a good close above that, you can talk about back to the upside. And essentially, this is also giving you a bullish divergence. And even if it doesn't show it on the oscillator, because sometimes it might be too close, but essentially you're getting that bullish divergence, right, where price has actually made a new low. So what do you want to see? You want to see closes back above, gives you the bull div to come back up and test stuff. Until that happens, until you get confirmations, yeah, we've got some, very oversold candles. We've got stuff coming back to the downside. Even with the core trend, we've got kind of like our base that we've created with the green zone. It's wicked all the way back down to the floor here at 28.1. That's the bottom that we want to hold border-wise. So it's essentially doing everything right. And now we just want to see closes back above, some continuation move to come test the big boy stuff, flip some major levels, and we move to the upside pretty hard. But that's the big thing. And again, look at the volume here, and then I'll go back to, say, the BitMEX volume. And you should be seeing some disparity as well. Not so much, but it's not going to be always the exact same based off of the volume candles. It's really important that you're looking at what you're actually trading on is what you're actually viewing. Like the chart needs to be the same. So again, here's the potential reversal, right? You want to see closes above. You want bullish volume, leaving these shorts out of position, which they are currently, and that'd be nice and dandy because that's where it is, right? So out of position is like where there is. Essentially, I'm using that in the same sense I would talk about order flow. Now, I won't go through order flow like I don't because we don't all have like Sierra and some of these other tools that allow you to see order flow in real life, in real time. But out of stuff that's out of position is things like this candle. Why is that? Why is the bullish volume there out of position? Well, because the next candle down, these guys are in longs. There's bullish up volume, but the next candle down went volume completely below the bullish volume. In the same sense that in this up candle, we had bearish volume that whatever put whatever this high was, it's now out of position if people are in longs because we have very strong bearish volume. Some of the best examples are like back here, right? What happened in this down candle? Like with everything else off, like not even looking at it, what happened with this down candle? Well, all of the bearish volume, the majority of it was here at 28.4. The next candle up was a bullish volume candle that is in control because it's bullish long above bearish short volume. That means this bearish short volume is out of position. So what does that tell you? You have a good chance of reversal as long as this structure holds. Did it hold? Yes. Now, it's not always. We need to have confluence of tools, right? So when you actually have failures of it, that's why here's the low that we created. We made a higher low, came back down, failed, next candle, failed volume, and all of the longs in this zone got wrecked out, essentially, because people ape. Okay, here's an example. We get some nice, very strong bearish candle here to the downside, where price is currently above it, right? We're above that volume. Do we want to see gains above? Yes, we want some bullish volume now to put both this bearish volume and that out of position. So you need some bullish volume candle to go up to confirm that, hey, these shorts are out of position. The fact that we closed the candle above bearish volume, oh, my thing just flashed. There you go. Right? We closed the candle out above the bearish volume because the bearish volume is right here, right? I'll just turn that off. We can all see it. That's where the majority of the bearish volume is. We closed above it. What do we want to see? Gain and go. Does that make sense? Was that answer your question?
So you could basically use it like an order block thing.
Yes, exactly. You can use it as an order block. It's if you're an order flow person, you can treat it like order flow in that sense.
Yeah.
Yeah, order flow is just like it's a bit more technical, but I wouldn't expect anyone to pay like $100 a month just to look at order flow, and then basically doing quick math in your head to look at liquidation potential of these positions because X amount is. It's just a bunch of stupid math stuff, but essentially what you see with that is like this. You essentially see this where if there's a lot of bearish orders, underneath the highs, that means they're in control, and anyone above that is out of position. Like even here, I know it doesn't look like much, but every candle has, unless it's a very low volume candle, every candle has max volume, right? Where's the majority of the volume on this upside candle? It's right here. Where's this volume? Is it below or above the bullish volume? It's below. What does that mean? That means this bullish volume right here is out of position. The fact that the majority of that volume is below not just that one, but the majority is below the previous candle as well. I mean, yeah, it's just continuation down until proven otherwise, until you gain something back. It's the same thing here. It's like you still wait for the confirmation, right? We have more bearish volume is still in play. You need bullish volume to take over for a continuation move up. That's your trigger. Your trigger isn't just to be like, oh, we're above the block, go. No, you need the actual volume to go. You can try in long highs of volume when you have, essentially bearish volume below you and you close the candle above, but that's very high risk compared to waiting for things to be out of position. If that makes sense.
If you go back to the previous zone on the 15, that block there, you could actually use that one as confirmation on that zone, on that order, yeah.
And what else is this on the 15 minute? What do we know? Turn that off. What is that? Essentially, swing test.
Yeah. So you can
swing.
Yeah. So combine it with a swing and a kind of similar like an order block.
Yep. Yeah. Essentially. Is it also a major level? Yep. April Q2. Same exact zone. More levels of confluence tell you that's the level to hold. Start going to the highs, you get a liquidity grab, another liquidity grab into the bands, fail, move back down. How about delta? Do we start closing underneath, right? Bearish volume in control at the high. That's another example of failure, essentially, right? Because if there's bearish volume at the high and we had previously bullish candles, what does that mean? It means the opposing move, which we've been going up, right? We've been going up in this zone. What's in control at the high? The bears, essentially. So what does that tell you? Well, it's like just look at the levels that they're essentially holding. Are they controlling the volume? Yes. They're still in control of volume. Even we have an upside move. Did we gain anything back? No. Bears in control of volume. Some of these things, when you actually look at them, it's like, well, but what about here? We had like the low and then a strong bullish candle. That's one part of confluence. Like say that one candle, yeah, it was bullish, but did it gain anything back? No. Is there anything on the oscillator that helps us? No. What about trend? No. Auto charting? No. It's still failing on our major level. So like this is your point of like invalidation on these things, which is the more amount of information I have, the better. And then I have a checklist saying, I need. We're quite low volume. We're gaining back above. Bulls in control. The MDVD. That's now the level to hold. It's also the April Q2. What does that mean? This is the level to hold for longs until we lose it. If we lose it, it invalidates the upside move. Is it a good 3-to-1 risk reward essentially? Right? No, it's a short. No, it's another short. There we go. So what does that tell you? If that's the level to hold, where's your invalidation? Your invalidation is the low of the move, or excuse me, the low of that, essentially. Right? If that's the low you don't want to lose, what does that mean? Your entry's still valid at the high of it. What are you targeting? Either the next major level or even the high. Right? Does that give you a good enough risk reward? Barely. Even for the first profit target. You still take a 20% move and then you move your stop loss up. We go to another level. We gain above whatever this level is, this daily open. Do you move your stop loss up, take another profit target? Yes. So eventually, if you move this thing up, you go up to this zone, you're moving your stop loss essentially up to there, right? You're in profit. What happens? You'll eventually get wicked out, right? But you're making the majority of the trade. You're taking good profit targets. You're staying, risk negative or risk neutral in the entire trade. And that's what you look for. And for me, that's why I want the 3-to-1, because what could still happen in this zone? You can still get wicked out and then it comes back above. It's still a valid level. It's just not as clean. It's not as good. It's still a valid trade. But you'll have, usually, if you have a 3-to-1 or higher, what does that mean? You have 2 chances to enter the position and still make profit on the trade. That's why 4-to-1, 5-to-1, if you get really good risk rewards, they have to be reasonable, right? You have to be within a good target of, hey, do we have a high probability of testing the daily open? Probably, because we're below it. We're holding on a major level. Okay, you can still use that. But what does that mean if you have a 4-to-1? That means you can still lose the trade. Like, you can be stopped out of the trade 3 times and still make money on the trade. Or, 3 times. You can take the trade 3 times and still make profit. The only way to invalidate the trade is essentially lose the level, that is your invalidation, and then bearishly retest your entry. Right? And that's the whole point. Because then once you have that kind of ingrained in your heads, now you're essentially saying, well, I look at my trades, I've got my risk rewards, I'm essentially being able to smash the button, seeing that, hey, we're holding these levels, it's important. And then what happens? Now you've got high confluence trades. What are we seeing here? Bearish volume is underneath the current price. Right? The majority of the bearish volume is on the price. Do we see any reversal yet? Nope. Not yet. We're still creating new lows. We're not bouncing yet. That's the big thing. Once you get the reversal, you can start to come up to test structure above. And that's the whole kit and caboodle there. And again, the higher time frame stuff is always the key. The volume stuff, even at high time frame, is super important. Even on the 1 hour, right? Out of position. The next move up, do we gain back the major volume? Nope, we fail it, come back down. Strong bearish volume that closes. Failure. High bearish volume here, right? Bearish volume here. The next hourly candle, we not only do we lose the major level, the daily open, but we're also closing volume-wise below it. Continuation. Taking all of that out. Good questions, though. Very good questions.
Chris, quick question. Can you do you recommend trying to see the funding rates and try to combine that with the volume?
So with the funding rates, most of the funding rates, because we've been so bullish for so long, I've got the divergences on them right now, just because I think it's pretty interesting when you see some, when it pops on the divergences, because it kind of gives some more confluence. But what I want to see with divergences is that I want to see major reversals. So if we start seeing stuff like we saw essentially here, right, where we have funding going really hard to the upside, still holding very bearish funding, and then once we broke the low, funding starts switching bullish again, is eventually we then start bottoming out. So we're looking for a low in the move to come back up to test stuff higher. Funding's still bullish, and it has been for a while. So essentially what I look for here is when they start pulling funding, let's say we're going down right now, let's say funding starts getting pulled and starts going up, we could have a continuation move down because there's no incentive to take long positions. They're still incentivizing long positions based off of funding, and that's the big key in my head. So to answer your question, I look at it, but mostly what I care about is the high time frame. That's essentially the big thing. With the divergences, you get some pretty cool data as far as multiple points of confluence, bang, bang, volume, hold of level, continuation up, that type of stuff. But it's a much more of a high time frame thing, in my opinion, with the volume. I've been using it less and less just because the only time it really matters is when you see the reversals in volume. We get price moves the upside and then very bearish volume comes in, and then we start, eventually we fail back down because shorts are very heavily incentivized. What does that also tell you? Well, anything above essentially 29.2, people have been heavily incentivized, right? Because that's the flip. That's where we saw the flip. Everyone's heavily incentivized for shorts. If we gain that back, where do we want to go? Back to the highs, potentially break 30K. That's the way I look at it, if that makes sense. Does that kind of make sense?
Yes, sir.
Cool. Well, great questions. Thanks, guys. I appreciate it. I know it's kind of uncomfortable sometimes, but I really appreciate it. Really, really smart questions.
Well, one quick question though on the crypto flow index.
Yeah.
I use mine online, and I've seen a tendency of it when the stablecoins cross over the large cap. They seem to be a little bit of leading indicator of a move is happening.
So when you see crossover,
Yeah, exactly.
so crossover of like stable to large cap?
Yeah, exactly. They seem to be not 100%, but I haven't backtested it yet, but it seemed to be like it's a slightly leading indicator of something is happening.
Exactly. And that was kind of like the whole point with it. And usually what you'll end up seeing is specifically the stablecoin. Specifically the stablecoin, when you see massive breakdown of stablecoins and you see a little bit of movement of like it's starting to happen with the other stuff. I like the line though. I really like that instead of just like the chop because it smooths it a little bit. I like that a lot. Good call. Yeah, I like that. But it definitely is a little bit of a leading indicator. So when you saw like here, massive breakdown of stablecoin, literally losing a significant percentage in that amount of time, that's a significant failure, right? Did we have a massive loss of level? No, we're holding level. I really like that. Thanks for pointing that out.
I think it looks even better on the hourly as well.
I have high time frame data on. That's my fault. I was confused. I was like, what? Does not look the same. Yeah. I mean, yeah, you have stablecoin start breaking down and large cap starts breaking down up and then large cap start breaking down. I mean, absolutely, man. And that was kind of like the whole... I like that a lot. Yeah. So the setting there is just changing the style to, instead of step line, to just line. I like that a lot, man. Thank you for that.
Yeah, because I worked around trying to see if I could do it like a MACD or something like it with the bars and stuff, but I in my opinion, line was the best thing that I played around with.
Well, great stuff. I really like that. But yeah, even on these major breakdowns, you see changes before they happen. You know, stable climbing, large caps dumping, essentially giving you kind of a lead. That's really cool, man. Good job. You get the gold star for today.
Oh, thank you, sir. Now I feel so proud. Should we go back to talking about fib levels again?
Oh God, don't even. No, you're banned.
Yeah, back to zero again.
Back to zero. I mean, yeah, that's the whole thing. It's like the idea that we can actually get some data before major moves happen. Like now, you're still seeing stable coming up on a 4 hour because we're going down. We haven't broken yet. But even here, you're seeing altcoins are starting to move up quite a bit as well. And it's really funny because even with the line on, you actually see that when people are exiting large caps, a lot of them are trying to get into altcoins and shitcoins, which is really interesting because it's not always the case. Because you'll see that kind of disparity sometimes where large caps are moving and then everything else is moving and everyone's exiting stable. And then there's other times where you'll see like here, where stable will be moving quite similarly to shitcoins and small caps and altcoins. So it's interesting to see the disparity of the things, especially in these zones. But that's really cool. I really like that.
Do you think people are when they do that exit from large caps to altcoins? Do you think because of the whole fuck? This just slipped out my mouth. Damn. Dominance thing.
Well, the dominance is showing that essentially. When you're looking at dominances, it's just showing that where there's more dominance as far as trades, like what's more interesting for people. So this is a better version of trying to look at 5 or 10 different, or even 30 different dominances together to try and find what's moving where. Essentially, what you always look for is the major changes, and I really like this. Like I really like this on the daily too. It really shows like a breakdown. Like, wow! So it shows like the move down didn't happen, but it showed like the major divergences essentially. And then once it got high enough, we had the continuation move down. That's pretty wild.
And the flow index showed you that way before.
Yeah, way before it actually happened.
Before. Yep.
Like even here, it's like even on the day before the move back up from about 20.5, it was already breaking down very hard, and yeah, that's really cool, man.
Wow.
That's some leading edge shit right there. That's pretty cool.
Even there, even a small right there at 30,000, it showed it too.
Yeah. Large caps breaking down, loss of interest, and before the move to the downside. I was not looking at that. I would have gotten a bigger, would have shorted much more than like the 30.7 that we did. That's tunnel vision for you.
I'm thinking of putting an alert on the crosses.
On the crosses?
Yeah.
I think the problem with the alerts, I'm not quite sure. Yeah, these are value crossing and not like.
What do you mean by value crossing?
So like percentages, like as it moves up and down by percent. So it's crossing, like, so you can set an alert that says like, well, okay, let's say I'm on the 4 hour, right? So looking at the flow, just looking at Bitcoin or whatever. Anytime you got into points where, essentially you're getting at 40% on stablecoin, those are usually like the major kind of tops in the moves, or when there's like minus 40, excuse me. That's usually the major tops in the moves, and you can start to see some bigger reversal there. Or like, when altcoins hit 44%, that was like, after that was all altcoins getting wrecked in this whole zone. So you can maybe use it in that sense, and then just be specific to be like, hey, what about high time frame? I think high time frame would be almost more interesting, because then you can be like, well, if it ever gets to like minus 40, any of the values, or plus 40, or then you're getting at like peak essential movement in that structure. So like that's peaking, stablecoins peaking at the lows, and then it breaks down the next day and closes that bearishly as large caps are moving up. I mean, you literally had an extra day of closing. By the time that day closed, the next day you're looking for the long to continue much higher. Like, that's pretty wild, though.
Oh, so yeah, okay. So you can't have a cross on green line crossing blue line or reversed. You have to use it as well. Okay, I see.
Yeah, because the problem is if you do that, you're going to get 50 alerts in a row. Like just bang, 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 bang as they're crossing.
So we can make 2 alerts when one of them is going down, the other is going up. Maybe that will give you a heads up start.
I don't know about connecting the alerts. I haven't tried to do chain.
Doing 2 separate alerts. One for stablecoins, one for large caps. When the large caps start moving down and the stablecoins going up simultaneously, that's when the alert will fire. Does it give us a heads up? Hey, there's some change. Maybe I'm just thinking outside the box here.
Yeah, I could see something like that, and then so adding the alert, crossing. You wouldn't be able to get it like bullously crossing. You could basically you'd have to make 4 alerts for it, and that's the way I could see that. Is like, let's say here, you wanted to say, well, I want. Anytime a stablecoin crosses above 35%, I want to see it say greater than, 35%, right? And that's one alert. And then the next thing is, I want an alert. Let's see. If it's greater than that, I want the alert. And if it crosses back below, it would have to do... Oh, there we go. Crossing up and crossing down. That makes it so much easier. Sorry, I didn't even see that. So 35%, you can set it up there. Crossing up, you get the alert that says, hey, the stablecoin is crossing up, right? Stablecoin crossing up 35%. Fire it once per bar close, because it'll only give you the once per bar. That way it'll trigger every time the condition is met, but not more than one time per bar. Perfect. That's probably the best solution, I think, because then you'll get it every time it's crossing above that. And then you'll also be able to put crossing down. So if it's crossing up and you see that on stablecoin, then you make one for 35% crossing down. You'll get the alert that says it's crossing down, and you do the same thing for large caps at minus 35. So essentially, to catch what you're trying to do, you'd have to make 8 alerts, essentially. So for the upside move, you'd have to put crossing up and crossing down for stablecoin at a high percentage. And for the large caps, crossing down, crossing up at a low percentage, right? And it's not always going to give you the same thing, because like the values don't just because, oh, well, if this is up by this percent, that's down by this percent. You'd have to almost stagger it and stage it out. So it's not quite something you can really chain into an alert, but you could definitely use it as like, hey, stablecoin is crossing below 40%, essentially. And then price is moving back up, massive deviation in this whole upside move, break back down. Stablecoin still not very high, and by the time you get back down to the lows, that's like a more natural low. But the fact that you can lead it, where you can be like, well, that's where the high was, and that's where the low was, essentially, and then the next day close, and we saw that big drop off. It's essentially a reversal. Almost like individual oscillators. That's really cool. Yeah, you need like 8 or something, but I'd say you're better off just looking at it like that. I really do like the line version, but drop off, like look at the divergence in like flow, essentially, before we actually had the breakdown of the level. Breakdown, still looking down, comes back up, breaking down before, like as we're losing the level to come back to the downside. I think that's pretty nifty. Cool. Any other questions about the stuff? I know we hit a couple different things. And Egil, thanks for recording as always. Cool. So yeah, the big thing there again with using the volume, that's kind of what we harped on. Like here's an interesting candle. Like I said, here's the current hourly. We're seeing some bullish volume. It won't lock in until the actual candle is locked and like closed. But we want to see bullish volume essentially above that bearish volume, because what that does is it says that this bearish volume is out of position, right? And using this on like the 15-minute, let me just see if we actually got it. So here's one very interesting. Bullish volume at the low, below the bearish volume. So, and the close was higher than the bearish volume. So what does that tell you? Bulls are in control from lower than the shorts, and price closed above them. These are now out of position. It's another way to look at it. So what do you see now? Currently, yeah, all of the bearish volume is right above you. So it's still potentially, you're still good to have that long from there. The close was a little bit janky. Now there's a lot of bearish volume next to you. Wait for the next candle close and then see if you have a gain of that. That's essentially what it is. But that's a pretty bullish move in general. The fact that we created the majority of the bullish volume on that candle was done below us. And that's, the bearish volume is here, the bullish volume is there, and the close was higher. That means that essentially is out of position. Is that kind of clicking for people? I know it's a bit of a difficult one to look at.
Hey, Chris, how would you take that trade, boss? How would you put your risk reward and your stop loss based on just what you showed us? If you would take that trade.
So right now, just because of the wicks alone on the time frame, I'm not really super interested in it. For me to take a trade like that, I want multiple layers of confluence. So like the fact is we've created some low closes, we've created a new low. If this candle here is the low in the move, right? And I want to see what else did we do on that candle, right? That was the bearish candle. The next candle was bullish and we're above it. So what do I want to see? This needs to now be the low in the move. I want to see the hold somewhere in here for an upside continuation. Essentially test and move away. And I don't want it to close at the lows. So if I was going to try and do a risk reward on it, what I would essentially do is look from there anywhere from about the midpoint of that level. Let's see, something like this. Probably holding the low all the way up to the April. Do I get a risk reward that I want? No. So what would I have to do to make that happen? I'd probably have to get a really tight stop on it, somewhere probably just below the block that I want to see it held, and then that would be my stop. And I could probably, with a risk reward like that, targeting the main level above it, I think that's pretty reasonable. I could get stopped out 3 times and still make profit on the trade on the 4th time I enter it. So risk reward is 5. If I get on the 4th trade, I can still make profit that covers everything else that I lost. And on the what's up?
Yeah, okay, like continue. I'm gonna ask a question after this.
No, go ahead. That was pretty much it.
Okay, so the bullish candles that are not colored with like the longs or the short positions, when they're more hollow, like this one. Or we don't have the same.
Yeah, I'm on the BitMEX chart now. So again, it's depending on what you're looking at. It will differ based on the chart you're looking at, because there will be more spot volume versus long short volume. Like I was looking at a perpetual, which is a futures only. It's similar, but it's not always going to be the same. So here, again, similar example. The bullish volume is below the bearish volume. The close of that candle was above the bearish volume. So technically in this zone, yes, the majority of the longs were lower, but we're holding the low of the move. Where's the low of the move? Essentially, it's right here, right? Where are we now? If that's the low candle. That's the hold where we want to see from the move. I don't want anything lower from this. And then I would look to try and essentially long that going higher. Let me see if I can get the stuff to reload here. I'd probably have to keep it pretty tight to make my risk reward decent to come back up to April. Something like that. But again, you have a very quick invalidation. If it breaks below that low and closes below, you're essentially invalidating that swing. Because again, I'm on the 15-minute. It's still giving you a pretty decent risk reward based on whatever your entry is. But that's essentially what I would want to hold. If that makes sense. Does that kind of make sense, or are you kind of lost with that one? I know it's a
no, it's good. I agree with you. I like it. That makes it a lot easier for me.
Yeah, and I mean, there you go. Risk reward 5. It's a decent risk reward.
Hi. Can you kindly repeat that for me, please? Thank you.
Oh, you're welcome. So, with the whole risk reward thing, the idea is that if we plot our risk reward to a reasonable level for a retest, if we have a risk reward of over 3, here we have an example of a 5. It means that we can lose the trade several times. We can lose the trade 3 times, and then on the 4th time, we'll still make profit on the trade. So the idea with the risk reward being strong is that you're now able to re-enter the trade several times if you get stopped out, because it's still valid. What's the invalidation of the trade? Closing essentially below that bullish volume. With the bullish volume candles and the bearish volume candles, looking at the current structure, we have a bullish candle here, which was the previous 15-minute candle, right? The bullish volume was below the bearish volume. So what we want to see is that bullish volume hold, because we closed higher on this candle, the bearish volume that's here, this is the majority of the bearish volume, is below the current price. That means these two these two areas of short volume, bearish volume, they're out of position. That means that, if they're in shorts or shorting or selling and price is above it, they are out of position. And that's why I put essentially my, stop loss essentially being as, well, if we break down and lose and have bearish volume that goes below that bullish volume, the downside move continues. Does that make sense? Did that answer your question, or what specifically, anything else that you kind of wanted to see on it?
Yeah, that's fine. Thank you.
You're welcome. So that's the biggest thing with this, is that also it's really easy to get sucked in, like I keep saying, on the 15-minute, right? So on the 15-minute, we've got, let me just zoom out real quick. If I go to the 1 hour, what are we doing on the 1 hour? What are we doing on the, we're essentially still potentially doing a macro higher low, right? That's the level we want to hold. That's the level we want to hold, for a bounce back to the upside, right? And we'd want to gain that to go back to test the weekly open. That's the eventuality of what we want to do. What happens if we lose this structure? Well, yeah, we made a new high, but until we have a settling of essentially making a higher low from this low, we're still lower time frame moving down. So this is the whole point of like the tunnel vision of high time frame, low time frame. I'm only on the 1 hour, and we can very clearly see, like, from these highs that we did from like this low, right? We've come down and made a new low, made a new high, higher low, but then here we start making a lower high. In the major move, we're essentially doing this, right? So have we made a new higher low yet? We think so. We can see low time frame, it's starting to potentially reverse, but we want confirmation of the level. So even there, when I was on the 15-minute looking at the volume stuff, yeah, the oscillator's quite bearish, or it's quite low, excuse me. Not bearish, but low. Are we gaining bat structure and stuff for continuation up? Not yet. We've got some promise of that, hey, the volume's in position. So what does that tell you about this candle here? All right? Essentially, that to there, that candle, we want this to hold, because that's the low, and that's the current local low. If we want to see reversal, we want to see, the gain back above. So we're close to getting a confirmation of reversal. It's not quite there yet. There's very low volume, and if I'm going to be honest, it's the FOMC day. Like, I'm not super keen on getting in positions right now, and I would not recommend people to do so. That's an extra market thing that is just like, the last time with the FOMC meeting, we basically just did, this, right? And that's not a, volatility is what's required to trade. Too much volatility makes it untradeable. It's a nice sweet zone of, we've got volume and we've got volatility, we've got movement and price. So if you're trying to scalp this thing today, be a little wary, a little careful, just because, Wednesday, it's middle week. It's a lot of, it's pretty decent for volume, but everyone's really waiting for that. That's going to be such a key thing today, I think. If that answers your questions there. But yeah, that's essentially most of what I wanted to go through. If there's any more questions. Yes, no, maybe so. That's pretty much all I got. So I'm going to go take a break for a little bit before the FOMC stream tonight. It's going to be fun to see what happens. This is mostly just for kind of entertainment, because I'm not looking to smash. You guys know, I don't smash buttons during the FOMC. Just because at the end of the day, whatever comes out and he says, there's people that know, and I don't know. And unless I have some like behind the scenes alpha, I'm not going to trade like I know what's going on, because the expected 0.25% increase, it could be priced in, it could not be. We haven't really had major downside moves, but increasing interest rates generally isn't that great. So that's all I'm going to say about it, really, is that it's one of those things where it's just, like it's like taking a position on like an election night for like the U.S. If the U.S. is having an election night thing, like the volatility is everywhere because nobody knows really what's going on unless there's like a clear, defined thing. And you're gonna see lots of emotional traders, lots of news traders. Everybody thinks, oh, I'm gonna smash short if he says we're increasing interest rates to 0.5, right? It's still probably gonna go against you enough to liquidate whatever position you have, and that's why you don't trade the news. Because at the end of the day, you don't know how that's going to affect the market. And very often it'll go against the potential bearish news before it continues moving in what would essentially be the potential bullish news. But I've saved all this stuff settings-wise. Core trend, just bans and liquidations. Oscillator, I've got, this giving me some good data as far as like the retail stablecoin demand. That's a really great indicator that, hey, we're getting quite bottomed. People have exited quite a bit into stablecoins. So even in the low time frame here, it's a pretty decent thing to say, well, we're seeing some reversal. Okay, lower high, failure level, failure the bands. Oscillator saying, okay, failure, we're at the highs, we're coming back down, we're trend breaking to the downside. Just as much information as you can, and the reality is you're never going to be perfect. You're still going to lose trades. And at the end of the day, and this is kind of like, I kind of leave it at this, which is, if your goal is to win trades, you're going to lose money. The goal should not be to win trades. It should be to take high probability trades with high risk to reward. Because if you're doing that, you can lose most of your trades and make money. Wanting to win trades, your win rate percentage does not equal profit. It never has and it never will. Unless you're winning 100% of your trades, but nobody does that. So the problem therein is that the idea of winning trades should not be your goal. The idea of taking profit consistently every day, taking a little bit off the top, building the stack, building your capital, and you're going to have red days, you're going to have losing days. And that's kind of like the hardest thing in all of this, which is you're not going to win. Most people don't win most of their trades. Even profitable traders, yeah, okay, we're above the 50% line, a lot of us, which is good. But at the same time, if you have a risk reward on every trade you take must hit a 5-to-1, you have to just essentially be over a 30% or 40% win rate to make money. Actually, over 25%, right? Anything over 20%, you're essentially making money in the long term. And that's what it is. It's repeatable. There's the confluence of level, the understanding of structure, the swing levels, gain loss, all of these things, and the indicators and tools that we have that help us and support us, and saying, hey, there's some pretty high confluence stuff happening right now. Like, there we go. We held the zone. We got bullish structure. We're closing above. Let's close that above and blast these shorts out of the water as we move back to the upside. So I guess that trade that I planned there worked out, potentially. And that's all we're doing, is that we're building that kind of confluence of level. That's it. And if it's repeatable, you're making profit. Anything else? Any other questions about other stuff? Or indicator stuff? And then, yes, no?
Thank you, mate. Great as always.
Yeah. Well, thanks, everybody. I hope you got something. And Egil, thanks again for recording stuff. Always super helpful. But like I said, I really do like this changing from the step line to just a price line. I think that's a pretty useful tool. It's able to more easily show changes, right? Like here, you have crossing over, you have increase in level currently from the low, like you start seeing some divergence here, even low time frame. Seeing some hold of level essentially on large caps, even though we made new lows. Again, bullish divergence on flow, I suppose. So, yeah, probably need to. But I like that a lot. Call it price action and indicators. Price action indicators. Or yeah, it's called just price action indicator use. I guess that's the easiest way to use it. But cool. It's nice to see that kind of working out there too, at least locally. We're probably good for a little bit of a PT if you guys actually took that one, which is fun. But
Yeah,
what it is.
One take profit would have been knocked off already.
Yep. Just because you're breaking into some structure, but you know.
You're DG scalping now, Sonic?
That's what I'm doing right now until I find somewhere to trade.
Yeah.
Yeah, and with that, by the way, I did post the MEXC link in the chat. I do have a tentative thing with them right now. I'm checking it now, and I have gone through and I've made some trades. It does trade. I can withdraw stuff. It's all fine. The thing is, they do have extremely low fees, which is really nice. I'm not super keen on some of the liquidity things. I'm not really cool. I don't really know where all the liquidity is coming from, so I'm just kind of testing it with like very, very fat grain of salt of, I want to be sure before I put any amount of money on there. And the big thing for me is that with the change that I saw is that they don't charge you much on fees, but they do charge you on withdrawals. So it's important that, if you're pulling money off the exchange, it's going to cost you a little bit. It's not much. It's essentially just a fee plus the transaction fee. So if you're paying like $3 to move or 20, it's going to be $5 instead, that type of thing. And it doesn't scale up depending on your size. It should just be based off of withdrawing any amount of money. So keep that in mind. That was something I did in the post there as well to kind of say what it's doing.
Did you guys, any of you struggled with the signing up? I cannot get past the verification, which is like you have to choose a fire hydrant or a fucking bicycle or a bus. It just keeps going on and on, and then I did.
Yeah, above that, it actually like where you're seeing the fire hydrant and the bus, the pictures. There's a little symbol thing above it that says what order it's supposed to be in.
Okay. Yeah, I've tried like 100 times. It would not let me. It said verification error. Try again later.
Well, yeah, just when you look at it, like you just look at where, like if you see the box, like I know what you're talking about. It confused me for a second. I was like, that's stupid. And then I like looked around, and but essentially in the box you have like your different shapes, right? That you have to hit. Mm-hmm. And then in the top right corner you have like the order of the shapes that they need to be in.
Oh,
it's really it's confusing. It's stupid.
I did not even realize that. I haven't used KuCoin in a while. But yeah, I was like, this is not. I thought it was the VPN. But yeah, that makes more sense now. No, like tried from 6 a.m. till about 8 a.m. and then it was like, fuck it, I'm done. I'm not gonna keep going.
Yeah, try it out, definitely. But again, like I'm not 100% like just on my end. I really want you guys to be careful. I'm not fully sold on like how they're getting liquidity, where it's coming from, how their engine works, and all that stuff. I'm having a meeting with one of their reps tomorrow to kind of like badger them and ask them questions. So if you're going to do anything on it, just very, very low stuff that you're prepared to lose, which I guess it's all central exchanges, but I just don't want anybody to get burned badly, but that and a couple other exchanges are about the only options outside of for US instead of going to like Binance.us, that type of thing,
And I believe.
Yeah, OKX as well. That's actually a bit more stable. But yeah.
And I do believe one of what's Mexi's guys slid into the Discord this morning.
Yeah, that's the guy I'm meeting with tomorrow.
Okay. Yeah. Okay. Yeah, I saw. I was like, maybe that's a scam. And then I saw the post. I was like, okay, that's probably a rap that's just got into our community. Oh no.
Well, I have the auto mod in place now, so it actually stopped him. It actually alerted you that it happened if you saw the server logs in the staff section. Yeah, but it said it like if you look at it, it actually showed that his name change was blocked. So even though it popped in welcome, he actually didn't get it. Well, I mean, just having a name that like, yeah, I mean that's the thing though. It's like you can't, we don't want to block people from getting in, regardless of what they're doing. Like the only things I won't allow is like people trying to like DM and scam people in the